Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's take a look at headlines. RBI directs Bajaj Finance to stop lending under eCom Insta EMI Card products, says that company did not adhere to digital lending guidelines. And India's October trade deficit widens to $31.46 billion. Exports increase 6%, imports surge 11%. And the top story that we're tracking, the Reserve Bank of India has directed Bajaj Finance to stop sanctions and disbursals of loans under its two lending products, eCom and Instamart EMI, with immediate effect. The RBI in a press release said that the actions were necessary due to non-compliance and adherence of the company to the ex-ante provisions of digital lending guidelines, particularly non-key issuance of key factor statements to the borrowers. What sort of impact will it have on Bajaj Finance? To talk about that, Karthik is with me here in the studio. Karthik, hi, good morning.
Hi, morning, Shweta.
The story broke yesterday. What exactly are these key statements and what did Bajaj Finance do wrong?
So I think, Shweta, RBI has been very clear starting, around sometime mid-August, September last year, 2022, when the BNPL, buy now, pay later apps surfaced, mushroomed out of nowhere. And many of these had linkages to Chinese players, Chinese investors, etc. But I think the RBI has been very clear for more than a year now that, hey, we need you to be transparent. Be transparent with us as the central bank on what are the products which are out there that you're offering, and definitely be transparent with the end users of your products. And in this case, the end users are the borrowers or the customers of the bank or the financial institution who use these financial products. Now, what are the key fact statements which are required? The KFS, again in September last year, RBI had come out with this guideline of 15 points. And these 15 points only wanted the banks or the lending institutions to be transparent. What were the key factors in this transparency? They said, hey, tell your customer on a letterhead, once a product has been offered, either opted by directly or once you have offered a product, any financial product to a customer, tell them what is the loan amount. Okay. How much of that loan amount can be used? What is the rate of interest that you're going to charge if there is a delay in payment, or in some cases, even if it's a no-cost EMI or something, what are the hidden charges? Tell your customers what are the hidden charges. What happens in case a customer does not opt for an increased loan amount, but you as a bank want to offer that? Do you have consent for the customer? At some point, if the customer wants to cancel that service, cancel using that particular product, whether it's a card or any other service, what are the ways by which that product can be cancelled or discontinued in its usage by the customer? And add to that any other hidden charges, any other interest, any other penal action that you may intend to take on your customer at what point in time, what are the kind of defaults, what are the kind of red flags that you want your customers to know of. Just be transparent with them. Now, in the case of these two products of Bajaj Finance, RBI has identified that eCom as well as Instacard EMI, these two products did not potentially adhere to the guidelines, these 15 KFS key fact statements which are mandated by RBI last year. And Bajaj Finance has not been transparent with its customers in disclosing these 15 statements to the customers and still getting them on board, still offering loans to them. For example, the eCom product or the Instacard product offers a loan of, let's say, 2 lakh rupees. It's an instant pre-approved loan of 2 lakh rupees. But customers can use only up to 1,50,000 rupees of that loan, either online or offline if you're going for a retail purchase, a point of sale sort of contact-based purchase. So where is that balance 50,000 rupees? Why does the customer not have access to it? Sometimes customers with a good CIBIL rating, with a good repayment history, the loan sanctioned to them is topped up. Now, if you top up that loan, do you charge different rates for the different utilization of that loan? Right. So basically, we don't know
be transparent with customers.
Yeah, RBI's single call is be transparent with your customers. Tell them very clearly what are you offering them, what are you giving them, what are you taking from them in return, whether it is through interest, whether it is through any hidden charges, whether it is through late payments. And anytime you are offering a value add or you're subtracting something from what you've given them already, there has to be a clear-cut communication on a letterhead to the registered email ID which you have as part of your KYC and through an SMS service, wherein you state very clearly what is it that you are giving and what is it that you're taking in return. And at any point, in case the customer is unhappy with the service, wants to raise a complaint, that complaint has to be resolved within the period of 30 days.
Right.
And post that, there are other RBI ombudsman related grievance forums on which the customer can apply.
All right, so Bajaj Finance, they're not adhering to those guidelines, but RBI has stated very clearly whenever the discrepancies are done away with, the two lending products can continue to serve its customers. That is, of course, the statement coming in from RBI. So I think pretty much like the Bank of Baroda app scam that we saw, I think the moratorium, if I can use that term right now, is only on onboarding fresh customers or disbursing fresh loans. Those customers who are on board already or those loans which are already being processed, serviced, etc., there should be no disruption to that. And it's only a temporary halt, it seems right now, on getting new customers, offering these two products, these two services, particularly eCom and Insta EMI, to new customers. All right, and the Bajaj Finance stock was down about 2% this morning, has recuperated some of its losses, is currently up 0.29%. So not much of an impact there. So the statement came from Bajaj Finance also yesterday, Shweta, and I think the statement clearly said that the financial institution has tried to adhere to all RBI guidelines and is now honoring this new requirement from RBI, and will look at what were the discrepancies, what went wrong with these two products, and is going to fix. All right, Bajaj Finance saying that it's going to fix the problems. But moving away to a story that came in yesterday by the way of India's export, import and the trade deficit that widened to over $31 billion in the month of October. What exactly is leading to this widening of trade deficit? A very simple and a very rude answer, Shweta, to that is gold. I think the festive season got delayed this year. We had the Shara in late October, Diwali in pretty much mid-November. So the real gold surge, the demand for gold soared in the month of October. And hence, when you look at the figure year on year, when you compare it year on year, the kind of spike you would have seen in the month of September in gold demand actually came in the month of October. And hence, the numbers got skewed a little bit October to October 2022 to 2023 when you look at it YOY. But at the same time, gold considered still across the world as a safe haven investment, and we've seen the kind of volatility in crude prices, the volatility in stock markets. Overall, the purchase of gold, not just India's import on gold, that of course is tremendously high, but overall, gold prices have shot up in the global market. At the same time, that's an interesting chart right behind you. Gold prices bottoming out in the October and then scaling up once again in the month of November. Absolutely. So actually you see mid-October onwards, 17th October to let's say, first week of November is when you really see that spike, sharp spike. And correlated, this is around the time that we were 10 days, 12 days into the Israel-Hamas conflict. And this was the time when oil prices were taking a beating and not a beating, in fact, were surging higher. And this is the time when the dollar index was high. So overall, money was flowing out from stock markets into products like gold and US dollar, considered safe havens. And what really happened, look at the Brent prices also. So you saw that they had actually flattened out or come to their moving average in the early month of October. And then look at the spike in oil prices as well. So October has been pretty much an expensive month, whether you want to buy gold, whether it is oil prices, and India in fact imports both gold as well as oil. Now specifically on gold, the demand for gold has surged as much as 95% year on year, again like I mentioned, because of the festive rush and the festive demand and the frenzy around buying gold. Now that of course being imported now at a value which is 20-22% higher again on a year on year basis, with a double whammy of rising oil prices and India being an oil importer, net importer of oil, and a depreciating rupee. So oil prices have gone up October to October 22 to 23 in the range of $3 to $4 per barrel. Rupee in the same period has depreciated by about 2.5% or so. So that's a double whammy. Add to that surging gold prices 20 to 23% or so, and in any case a higher festive demand for gold, higher by about 95%. All these factors
spoiling the trade deficit party in India. And hence you see, while exports have also been high, exports in fact have been almost $1 billion or so higher on a month-on-month basis.
Exports have also picked up about 6%.
That's right.
On a year-on-year basis.
So even if you look at it month-on-month, Shweta, exports were hovering around $33 billion or so in the month of September. They've gone up to about $34 billion. Now, some of this could be obviously attributed to higher exports, bigger volume of exports, but some of this could also be attributed to a depreciating rupee.
Right.
So exports bring in that much more dollar value. So overall, you see there are these three factors, out of which gold being the number one most prominent. Surging demand of gold at higher gold prices in the month of October versus September versus October of last year. Then you've got oil prices much higher when compared year on year, rupee depreciating. All these three have weighed in not in favor of India's trade deficit, and hence the widening of trade deficit to about $31.5 billion or so, which is almost as much, just $2 billion short of India's total export volume, which is about $34 billion or so. So actually, if you see, imports have still been very high because of these factors that I mentioned at about $65 billion, but exports have also risen month on month by about $1 billion. But that has more than offset its accruing benefits to India's trade deficit by virtue of rising prices on imports.
All right, and looking at the trends that are emerging in the month of November, which is oil prices are now down to almost under $80 a barrel. Given that we are out of festive season, we're moving towards New Year's, what sort of impact are you looking at as far as November is concerned? Do you think the export volumes may just be high, but import volumes could go down?
So if we can pull up maybe, so you're right, I think we have gone under the $80 per barrel mark on Brent. But if you can pull up the gold chart, you'll see that actually gold has continued to be in the higher territory even in the first couple of days of November. It started coming down. In fact, you see this trend, it started tapering down only around maybe, after the first week of November. And it continued to stay high even in the first 1 week of November. So I think some of this impact and the festive buying with Dhanteras, with Diwali will reflect, not augur very well even when the November data comes out. But if gold continues to not rise, follow this downward trajectory, we should be in a better place. But look at the Indian rupee also. If we can pull up the INR picture also, you see that for the last almost 3 months, September onwards, we've been in the high 83, 82, upwards of 82, 83 rupees per dollar range. So this trend is going to continue to become a problem for us. Look at the numbers we saw in the month of June and July. It had actually bottomed out to just in the range of about 81, 81.5 or so, right? And now we've maintained this steady sort of level at 83, and this is also happening because periodically RBI is selling its forex reserves of US dollar to keep the rupee stable. So this sort of open market operations by the RBI in a bid to keep rupee in the territory of about 83, 84. Coupled now with, again, gold prices for the first week at least of November continuing to be high, could spell trouble even in the month of November.
All right, so November not looking good so far, 2 weeks into November.
I mean, unless we see a real crash in oil prices, which I don't suspect will happen in the month of November.
$80.
Beyond 80, I think it'll be $2 up, $1 down. It'll continue in that range.
And unless people stop buying gold, which is not going to happen either.
I think, people will buy lesser gold in November than they bought in October.
That is
right.
correct.
So in volume, despite the price being high or lowering a little bit now, the amount of gold people will buy in India in November is likely to be lesser than what they bought in October. But then don't forget, we are also entering Shadi season. And the great Indian wedding is going to compel people to buy gold. I mean, Dhanteras and Diwali is still a little bit of, auspicious buying. What we see in Shadi season, what we see in Shadi season, wedding season, is actually ornamental purchases of gold, and that also come with other markup, etc. So I think, October numbers November numbers may not be as ballooned as October numbers, but November numbers are also going to be under pressure from where I see it now.
All right, October numbers not looking too good for India's trade deficit, which is now widened to almost $31.46 billion. November trends so far not pointing at a very rosy picture as well.